Hey, it's Brent of the Brent and Brenda team, and I'm back today. I want to talk a little bit about the waiting period to buy a home after you've gone through a foreclosure or after you've gone through a short sale if you're doing some financing. There are differences, pretty significant differences, and I want to make sure everybody understands what those differences are and maybe the advantages of looking at a short sale today versus letting the house go into foreclosure. So, if you're doing, let's say you've gone through a foreclosure today and you want to buy a home and your situation, 3 years from now has improved drastically. You've got a great job, you've got money for a down payment, you're ready to take advantage of the market again. And the waiting period after you've gone through a foreclosure is actually 7 years. So you're not going to be able to do traditional Fannie Mae backed financing, which is the majority of the financing that's out there. If you go the short sale route, the waiting period is as short as 2 years. So a pretty big significant difference between going foreclosure versus going short sale. There are other forms of financing out there, government-backed financing. There's VA financing, for example, which is for veterans. The waiting period actually after a foreclosure is just 2 years, same as it is with a short sale. With FHA financing, the waiting period is a minimum of 3 years. The same with a short sale. So maybe you're asking yourself, well, what's the big deal then? Why am I, worried about when I can buy a home if I go to foreclosure? Why go through the hassle of doing the short sale? Well, there's other things to keep in mind too, and one of those things that is going to play a huge role on your ability to buy the home that you want is your credit score. Now, the foreclosure is going to have a significant impact on your credit score. Could be as much as 250 to say even 400 points where your credit score is going to drop. So the short sale in itself, on the other hand, the short sale really doesn't have a huge impact on your credit score. There's nothing reported as a short sale on your credit score. Typically, why the negative impact happens on your credit score in a short sale is the fact that you're traditionally missing payments on your home. And when you have 30, 60, and 90 days late, those are the things that affect your credit score. So, think about the future. I know it's sometimes easy to get wrapped up in the moment and make decisions based on emotion, and especially in difficult times when you're upside down in your home and you're having challenges making ends meet. It's very easy to make a decision based on how you're feeling today. But I would encourage you to kind of look at the big picture as well too, and think about my situation will improve. I will want to buy a house again. I don't want to rent forever. As little as 2 years if I'm a veteran, 3 years if I go the FHA route. I'll probably be able to buy a home, get a much better interest rate than I would if I were to have the foreclosure on my record, and then that's only also going to affect the amount of money that you're paying, the amount of interest you're paying over the course of a 30-year loan. A lot of things to think about. So anyway, I hope that clears up some confusion. Hope that kind of makes you understand maybe what are the advantages of going the short sale route today versus letting your home go to foreclosure. So as always, if you have further questions, we'd love to hear from you. You can always visit us online at www.myarizonashortsaleteam.com for more information.